If I only had $17,000 and I needed to put that money to work and not just dump it in some high yield savings account, but actually put it to work using and leveraging Nvidia, here's exactly how I would do it. What's up, guys? My name is Pete, and if you're tuning in here for the very first time, you could see my broker statements at onlypeterpru.com and optionsellerschool.com. And if you drop a comment down below, I'm going to give you my favorite 25 option selling stocks. You'll get that full list, no strings attached whatsoever. Just drop a comment down below on today's video. Hit that like button, that subscribe button, and of course, I hope you're having a God-blessed day. Guys, let's go over the shoulder and talk about this strategy of leveraging about a $17,000 portfolio and the Nvidia stocks. Today's educational video is going to show you the possibilities of selling options with even, around a five-figure account, which most people have no idea even exists. And we're going to go into some more advanced strategies as well, so you could see how something like this scales. Now, just because we're using Nvidia today as our example does not mean that you can't use other stocks, okay? Nvidia is a great stock to sell options on for sure, but with that said, you can do this strategy on pretty much any stock or ETF out there for the most part. So let me show you what's possible first. So I'm over here just using Robinhood as our broker right now, and I'm going to go to the trade options section. You will need to get approved for options. You'll be asked some certain questions. You just want to make sure you're approved for cash secured puts and covered calls. That's primarily the strategies that I deploy. There are some more advanced strategies, options trading strategies out there. Me personally, I've never really found success with them. Say what you will about it. I have found over a decade of investing, this strategy keeps things simple for me. It keeps me grounded. It forces me to buy low and it forces me to sell high. And most importantly, it forces me to treat this like a business, not just like some buy and hold portfolio, okay, as you're going to see. So first thing we want to do is we're going to click sell a put. And right here is the expiration date. And just for this example, I'm just going to go 31 days out. What I'm saying here is I'm willing to buy 100 shares of Nvidia on November 7th, 31 days from now, okay? That's all that's saying. On that date, right? Now I get to pick my price that I'd be wanting to buy Nvidia as well, right? So for example, it's currently trading at $187, right? At the time of me recording this. If I scroll down to our 17s, $170 a share times 100 shares is 17,000. We would collect $276 of premium on this trade. Now, let's kind of walk through this. Obviously, results vary, all of the not financial advice, they're just the premiums I'm seeing, but let's walk through this because I kind of went through there fast, right? So what am I saying if I took a trade like this? What I'm saying is I'm willing at the close on November 7th to buy Nvidia at $170 if it's trading at $170, okay? Now, if it's not trading at $170, you don't buy it. Your shares simply expire, or your contract expires, right? Your collateral, your $17,000 no longer locked up, and your shares are returned back to you to then run the play again on Nvidia again or another opportunity. Either way, this 276, obviously, as you see this number is constantly changing, is given to you upfront from the options buyer. That is given to you immediately upfront, okay? This premium that you collect, that's not taken from you. Now, there are strategies that we get into here on the channel about rolling your positions, closing your positions early to free up your capital sooner. I'm just showing you what's possible here because a lot of people, what they do is they just let everything go to expiration, meaning letting it go all the way to November 7th, and whatever happens, happens. Nothing wrong with that, okay? Especially if you're a busy professional and you don't necessarily want to be involved in the day-to-day. That's the great part about this strategy, guys. You could really make it your own, okay? So I like to toss everything in my cash secured put calculators. I'm just going to zoom in here. You guys can get all of my calculators for free in our Facebook group. A link will be in the description of today's video. All right, so I'll put 276 of my premium collected. My collateral $17,000. Again, just to recap, that I'm choosing the 170 strike here, right? 170 times 100. That's just the way it is. One contract is equal to 100 shares. Okay, that's just the way it is. If you want to do more contracts, you are more than willing. So 5 contracts, that's 500 shares. You better have that money to be able to buy 500 shares of Nvidia at 170 if it's trading at that on November 7th, okay? So, but we're just going to assume one contract here, and you could see we have a decent return of a 1.62% return on our collateral. If we want to look at it annualized here, we could see it's just about 19%. Now, you're not going to necessarily do this trade every time like this. You can bump up your return on collateral if you want to. Here's the next thing. How do you decide, right? How do you decide what sort of strike price to choose. Well, as option sellers, I'm going to show you a different stock just to make this point here, right? We often look at the delta as a chance of probability. So on this 170 that we selected, we could see, let's just call it 20%, right? 0.19, 20%. There's a 20% chance that you will have to buy Nvidia at close on the 7th at 170. That's basically what it means, right? Now, it's not the technical definition of delta, but as option sellers, that's the easiest way to look at it. I like to look at it on the other way. I like to look at it as 80% chance that my contract expires worthless, and I'm simply walking away with that premium that I collected up front, and I'm not having to take assignment. Now, sometimes you got to take this delta and technicals, especially, with a grain of salt, because nobody knows what the stock market is going to do. But at the end of the day, with this strategy, I like to focus in on stocks I want to buy long-term anyway and just get them at better prices. What I found that serves me best, right? If I do this on like ETFs that I don't mind holding, or if I do, I want to own Nvidia, but I don't want to own it at 187, and I'm happy with being assigned at 170, then that works, right? That's what's great about this strategy. Now, talking about the risks real quick, just to make sure you understand, right? Let's say at the 7th at close, Nvidia is still trading around this 187 or anything above 170. You're not getting assigned, right? Your capital, 17 grand is going to be given back to you, okay? But the second thing that, and most importantly, what could happen, right? There's a 20% chance of it happening, right? Is that, right? Let's say at close on the 7th, Nvidia is trading under 170. Let's try it's trading at 165, 160, 150. You're on the hook to buy your shares at $170. Okay, you're on the hook to buy your shares at $170. Okay, so you just want to make sure you are comfortable with that risk for yourself. Okay, now I want to show you guys quickly just some basic indicators, right? So I'm here on just Yahoo Finance, and I have a couple indicators on here. The main one that I wanted to show you guys is the Bollinger Band, right? If you just search Bollinger Band here, you'll see that it will overlay this for you, this like little graph here. And I'm just going to look at the 3-month chart. This little graph, okay? So you could see this Bollinger Band, right? Nvidia at the time of recording this is trading towards its top Bollinger Band. What does that mean? Well, that means that people are pouring into this thing. People are buying it. People are excited about it, right? Whatever news is around it, made great earnings, whatever, right? People are buying into it right now, okay? Now, we can also do that with the indicator called the RSI, right here. You can see the RSI. You can add that indicator by clicking your indicator tab and just adding your RSI, leave everything default. 62 on the RSI is slightly overbought territory. Not extremely overbought, but we usually can, usually the RSI, if it's above 50, you're starting to move into an overbought territory, and below 50, you're moving into oversold territory, right? So how do we use this information to decide our cash secured puts? Well, the easiest rule of thumb, the one that I usually follow, is sell cash secured puts when you're at the bottom Bollinger Band. So let me show you an example of a stock that's looking like that right now. So I'm just going to refresh my screen right here and take a look at Kenvue. Kenvue has been getting absolutely hammered here. Look at the RSI. It's 24 RSI, right? That's heavily oversold, right? People are pouring out of it. They don't want it with all the news coming right now. Kenvue, get out, get this thing. Oh, I don't want this stock no more, right? And it's towards the bottom Bollinger Band. Now, this is the best time to sell cash secured puts, and let me show you why, right? So I'm just going to go to Kenvue right here on Robinhood, right? Now, obviously, this is a bit of a cheaper stock compared to Nvidia, but I think you understand the point, right? So if I sell a put here, right, and I just do that same expiration date, you could see my premiums and my strike price selections are a lot better, right? So for example, the 15s, right? I'm collecting $33 of premium, right, on locking up $1,500, right? So for example, if I put $1,500, right, and I'm collecting $33 of premium, my premium return is now over a 2% return, plus I'm getting a really, really good strike price. What do I mean when I'm saying a really good strike price? Well, typically, historically, right, when we hit these bottom Bollinger Bands, we start to go up. So the way I almost like to look at it is your change of assignment is a little less likely. Like if we look at Nvidia over the past 6 months, right, very rarely bounces off, is at the bottom Bollinger Band, right, because there's so many people pouring into it. But when it does, it doesn't stay there long. It bounces immediately off of that bottom Bollinger Band. Sometimes stays there for a couple days, but immediately bounces off that bottom Bollinger Band and starts to work up. So when we're like, let's say we did a cash secured put here down here when it was trading at $96. Who misses those days? Let's get some amens in the comments, please. Let's get Nvidia. Let's get Nvidia back down there. So with that said, we could see if we did the 97s, or let's say it's a 97 here, and we wanted to sell a put, we could do puts at like 90 back then, right? But like if I go here now to Nvidia and try to find a 90 put, right, like 30 days away, even if probably a year, honestly, probably couldn't even get it. If I went and tried to find a 90 put, like it doesn't even exist, right? Like there's no shot. Actually, you get $5 on it, right? But if you did it right here while it was at the bottom Bollinger Band area, you'd have probably gotten paid many hundreds of dollars to take that trade, right? So when you're patient and you wait for the setup to come to you, you're getting a better strike price, right? To dollar cost average, potentially down into the stock. You lessen your chance of assignment because oftentimes we bounce off the bottom Bollinger Band. Again, not always, right? Look at Kenview. Well, it was when this thing dropped down, just been riding this wave down. Like even if you sold puts here at 18, right? And you maybe did the 17s, right? Maybe you would have been getting assignment. That's why I usually like to wait till things settle down, especially on a falling knife before jumping in. Like Kenview right now, I believe is kind of seeing a good amount of support around this 15, mid 15-ish level. But that's why it pays to be patient, especially as an option seller. Wait till it's at the bottom Bollinger Band because you're going to get a better strike price and you're going to collect more premium and you lessen your chance of assignment. Okay. Again, if we look at, it's not always the case. If we look at, let's say like Kenview over the last year, right now it's bit under that bottom Bollinger Band, like this entire month here, right? But we could see historically, it's usually, hits the bottom, comes back up, goes down, comes back up, right? It usually kind of recovers for the most part. And if you're able to be patient like that, again, you're getting a better strike, right? Like Nvidia right now, obviously it's hot, but right, like if you did it just like literally like just a couple weeks ago, like not even a couple weeks ago, well, yeah, just about a month ago, would have been a great time to sell puts on Nvidia. For example, on the 8th, you had actually an entire week from the 2nd when it dropped all the way to like the 10th, right? If you were selling puts on Nvidia, let's say you were doing like it was trading around 169. Let's say you were doing the 150s or 145s, right? You wouldn't have to wait long because it bounced right back off, and you would have all your contracts would have expired worthless, or you closed them out early for pennies on the dollar to free up your collateral to jump into other opportunities. Listen, I know a lot of these stocks are exciting like Nvidia, and you want to jump into them, but I would say think about it, right? Think about when you're selling puts when a stock is already just kind of blowing up and hitting all-time highs, you're kind of hurting yourself, right? Again, if you're bullish on Nvidia, toss it into your buy and hold portfolio, right? Really, for selling options, I believe the best way to sell options is when you shift your mindset to treat it like a business, not necessarily a buy and hold type of situation. Guys, if you want my full trade log as well and learn about how the Ark Options Strategy is and how it replaces the wheel strategy, especially if you're somebody that's a busy person. Look, I'm not a full-time trader, nor do I want to be, but I believe this strategy everybody should know about because it doesn't take you more than maybe 30 minutes a week, if that. So if you want to learn the full strategy, plus get my free trade log just for learning about our mastermind and mentorship program and potentially join an incredible group of option sellers sharing day in and day out, click the first link in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.